Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply classical technical analysis tools to Meta Platforms stock. As usual, we will start with the major structure over the monthly chart. First of all, we will identify and draw the important key levels. First of all, we do have a monthly resistance at around 383. Then we do have another key resistance at around 219, and finally a very important support around the range of 120. These levels are very important because we can see here Facebook was in a trading range or a sideways. It was a very wide trading range having support around 120, and it had resistance around 220. So it was of a $100 thickness. Later on, it managed to break through the resistance, marking a new high around 380, which is the historical high for the Facebook or recently Meta platforms. These are the most important key levels on the monthly chart. Now we check the long and medium term picture over the weekly chart. First of all, the trend is broken. The medium term trend, which was an uptrend, is broken, not valid anymore. The rising channel over the medium and long term is over. We can notice that the reversal took place without a clear reversal pattern. It just failed to reach the channel line, reflected from the monthly support, monthly resistance, and broke through the uptrend weekly trend line and tested it from the opposite side, then reflected. So there was no clear reversal pattern, no double top, triple top, head and shoulders, broadening formation, nothing at all. It just broke to the downside. We had a support, weekly support, which was also broken to the downside. And I think the stock established a medium-term downtrend. Of course, it's in an impulsive wave now, and the thickness of this downtrend helps us to extend the channel to the downside. When the channel line is broken, it indicates furthermore strength in the prevailing trend. So extending the same thickness to the downside may help us, you can say, it may help us to calculate or measure the target to the downside. Okay, so it's clear that once upon a time Facebook was in an uptrend. This uptrend was one time connecting higher lows and higher highs, and we can see here it failed to reach the channel line, and failure to reach the channel line was a clear sign of weakness. Then it reflected from the historical monthly resistance, and sadly it broke the trend line, and it was a valid break. On the retest, it reflected to the downside, and the stock was in an uptrend no more. Instead, it established a prevailing new medium-term downtrend that increased in strength after it broke the channel line to the downside, indicating more and more selling pressure, and pushed us to draw another second channel line, helping us to approximate and calculate the new down targets. And as we can see over the short term, it also broke another key monthly long-term support at around 220. Now let's have a look at the short-term details over the daily chart. We don't have much going on. We can see here we do have a very important daily short-term support around 175 and around another resistance, daily resistance around 236. So it's easy to know why did we draw these. Here is a clear short-term peak. That's why we drew this level over the short term, 236. And here we had exactly the opposite reaction, creating a short-term bottom around 175. For sure, we can see clearly the increased volatility, but the stock is under a very strong selling pressure as long as it is below 220, which is the monthly resistance. Okay, let's zoom out a little bit and do some little forecasting. We can say now that the Facebook is in a medium term, maybe a long term downtrend, very clear bearish environment over the long term picture. Within the short term, it's trying to consolidate a little bit, but it's still under strong selling pressure as long as the closing is below 220, which is a major monthly resistance. Although the consolidation may take a form of a trading range or a clear sideway, but it is considered to be bearish as long as it is failing to break above 220. So any reaction against the prevailing trend, any correction to the upside is considered short term, and it may be a chance to do some virtual trading on the short selling side around 220, maybe 225. Let us see what will happen during the next few weeks, but it's clear that Facebook is suffering over the medium and long term as long as it is below the mentioned monthly resistance at 220. Of course, if selling pressure resumed and if the markets started to fall once again, the stock may break below 175, and if it did so, this means that we will be pushed to draw a third channel line, weekly channel line. This is channel line 1 and this is channel line 2. So if it broke again something like this, but with a confirmed break and retest and resume, this may force us to draw a third channel line, trying to conclude where the lower targets may come. And I think it may be around 140, 125. So keep an eye over the very short and important support zone ranging from 175 up to 180. It should not be broken to the downside in order for the stock to do some accumulation before it creates a corrective wave to the upside. That's it for now. Keep in touch. Please subscribe, like, and share, and see you soon.